Let me now bring on board Deven Choksey, Managing Director of Deven Choksey Securities. Deven, morning. Thank you for joining us. Deven, do you think budget is more like a 24-hour event, more like a 48-hour event, and once the budget volatility is out of the way, and when markets will open on Monday, it will be back to basics, which is crude, liquidity, and political concerns?
Yes, absolutely, Nikunj. Good morning. More like, I think I am believing that after the budget presented, probably I think you are going to be back to square one, because I think looking at what happened yesterday in case of railways, probably I think you don't carry too many big hopes now at this point of time from the budget point of view. In fact, I think the hopes pertaining to the management of fiscal deficit and bringing in the taxation reforms, I think that is something which we are continuing to hold on to. But the fact is that I think if the resistance comes in the political area, probably I think that may not happen. So I would agree to an extent that post-budget we will be back to once again I think those issues which are haunting us and those which we have named immediately. So those probably I think the related to crude oil, probably it is more I think a kind of an important situation for us, and I think how the government plays its card on that front, I think it is important in increasing the fuel prices. If they don't, probably I think we are going to head into some amount of disappointment post-budget. So, but let's see how it plans out, I think hereafter.
Deven, hi, morning. What about today though, and what is the expectation from the RBI after a 75 bps CRR cut that we already have seen? While yesterday you had the bond markets rally as well as banking equities, what is it indicating to you in terms of what the RBI may do today?
To my mind, if I look at I think the liquidity position right now, after the CRR cut of 75 bps, releasing 48,000 crore into the system, there is still a shortfall of about I think 12,000 crores, which is I think the total shortfall in the system is close to around 60,000 crores. So a distinct possibility that RBI may once again I think bring down CRR by another 25 bps and allow the system to take its course and probably stay liquid. More importantly, I think liquidity in the system should help the banks to bring down I think the interest rate going forward. They may not take immediately the rate cut measure in this particular policy review. They may probably wait for the next month. But if CRR cut is done, then probably I think they would be doing at least some amount of liquidity infusion, which is more expected. And if you translate this action into the banking stocks and the bottom line of the banking portfolios, some of the banks like State Bank of India would have a positive impact of close to around 3.5% onto the bottom line due to the bond yield portfolio provisioning norms, on which I think they would probably get benefits. So around 3.5% for State Bank of India, and some of the other banks like Axis Bank and private sector banks would have correspondingly some amount of gains to talk about at the bottom line. So generally it would be seen as a positive move if RBI cuts I think 25 bips on the CRR.
After a 20% run-up this year, are you advising your clients that they should exercise caution? Because if I look at the fundamental landscape, crude prices are high, there is still a policy paralysis, we will not get anything from the budget, and valuations are no longer compelling.
Yes, Nikunj, I think that's been the communication line that we have been putting across every day to our clients, and we have been telling them to stay cautious. At the same time, we are not asking them to avoid the market. We are basically telling them that individual stocks which are commanding a lot of merits on a time-to-time basis, I think one should be investing into them and probably make the best use of the opportunity available of uncertainty to your favor when you buy into the markets. So certainly I think when we tell them that overall market view, that we would like to keep it as a cautious view, we don't want to I think keep the views beyond 5600 as of now, unless budget gives some I think a dramatic push to the reform process. We would not be basically very gung-ho about the market beyond 5600 on an overall basis. But some of the individual stocks are suggesting that they would probably get re-rated and corrected from the down valuations. So from that point of view, I think we would like to look at some of the mid-cap ideas, some of the banking stock ideas, some of the infrastructure companies. We would probably I think look into and probably buy into the market. Currently also I think the pattern is on, and we are buying in our PMS portfolio some of these companies.
Deven, you two track both these names quite closely, Tata Motors as well as M&M. If you had to pick one, which one would it be?
It would be Tata Motors, I think clearly, Asha, because the fundamentals of the company still suggesting that the valuation is far more comfortable to buy into at this point of time. Another good point I think which is happening in favor of Tata Motors, that America is basically recovering, and as a result of which I think the volume from the JLR portfolio in America could possibly I think once again support Tata Motors in these times. And JLR portfolio contributes significantly to the company's performance at the bottom line. So from point of view of buying a company which is available at a valuation which is comfortably placed I think below 7 times or 7.5 times, I would like to buy into this company, stay invested, and with the fall in the interest rate, the domestic scenario can only look better for them, both for the commercial vehicle segment as well as the passenger vehicle segments. So from that point of view as well, I think this company gives a lot of comfort. One could possibly expect around 10 to 15% kind of a run on an upside from this company going forward in next I think 3 to 6 months time.
Deven, Wipro is not ONGC, it is best of the breed when it comes to large cap IT, but are you a bit surprised that yesterday Wipro e-auction almost bombed?
Yes, Nikunj, disappointed as well to a greater extent. More because I think the most of the bidders who put in the price, I think they put in the price below the floor price, which means that the buyers are wanting to have the buying appetite, but at the same time I think people are not still very comfortable to buy into the company with confidence at a valuation at which it is available currently. So that is being disappointment. As I see the overall IT scenario happening in the global marketplace, I think indeed some of these companies are likely to show some record performance, and probably I think they are having some good amount of orders in the pipeline, because in America they have already started releasing the expenditure budget. So from that point of view, next 4 to 6 quarters generally expected to be I think good quarters for IT as a whole in general, and Wipro can't be miss out on that aspect as well. But unfortunately I think the buyers are looking into the confidence to buy aggressively at a price at which I think the company had put this particular offer. So certainly I think some sort of a disappointment I would say, and more also because I think the long only investors are not returning into the market. That is a concern. People are putting money into this market, lot of ETF money is also coming into the market, liquidity is there in the market, but some serious long only investors I think would like to hold Wipro kind of a company for 5 to 10 years. They are not returning into the market. That is also some amount of concern that I am carrying with the kind of episode of Wipro that we saw yesterday.
In the light of how politically things have moved between Congress and TMC, do you think more than the credit policy or the union budget, it is the political equation which will now have an impact on Indian markets?
Yes, Nikunj, I think the unfortunate part is that the kind of dictate which has come up and the way in which I think the budget was discarded after presentation of railway budget. And I was quite shocked to find that I think after Prime Minister himself acknowledging that the budget is good, and then the minister has resigned, I think it is really upsetting. So from a point of view of looking at what could be the impact coming on to us, I think I would think that if the government goes slow and if they don't take policy initiatives, and if they further I think don't take the reform measures, particularly in curtailing the fiscal deficit, I think it would be a big miss or a disappointment as far as the market is concerned. And that is one fear that one would like to keep at the back of the mind in the budget presentation and thereafter. So this is certainly I think not an easy task I think to evaluate, but really feeling that if things don't go the worst as it is feared at this point of time, probably I think senses would prevail and the country would be allowed to go on to proper reform path which is required most at this point of time.
So ahead of the budget, are you fully invested or are you raising cash on every uptick, Deven?
No, Nikunj, keeping cash, definitely I think in every market, I think keeping some amount of cash for sure. Because as I have said that I think one is not totally sure about I think what the direction would be. So one would like to keep I think the investment in selective stocks, definitely. But at the same time I think few cash or some cash definitely I think close to around 15 to 20% in the portfolio is must, because I think if at all you want to have an opportunity in a falling market thereafter, you require to have cash. So certainly keeping some cash definitely.